Have you ever entered a trade and price immediately reversed against you? It's not random. Beginner traders usually enter exactly where the smart money wants their liquidity. Smart money traps happen when price tricks retail trader into buying or selling too early before moving in the direction. And the number one mistake beginner trader make is entering breakout immediately. This is almost beginner trader though. They enter immediately after a breakout without waiting for any confirmation. They wait for a breakout, they search for a breakout, and we are using this. They search for a breakout without waiting for a confirmation, and what they do is they jump in on a buy or a sell. So we are using buy here. They jump in on a buy, and what happened? They want to continue going up because they believe this resistance is taken out already. So they jump in without a confirmation, and what happens is they see now that they are being trapped in. They see now that they are being trapped in into that particular trade, which shouldn't be. Which shouldn't be. Most beginner traders think breakout means continuation, but institutions often use that particular area to collect liquidity. The second mistake that beginner traders mostly do is they ignore higher time frame direction. They're based on the lower time frame direction and they focus less or they don't focus at all on the higher time frame direction. If you have marked out on the 5 minute time frame, on the 4 hour time frame, you can see what we have here. This is what we have on the same candle, the same charts, the same everything, just the difference in the time frame. And this is what is causing most of you beginner trader out there losing your money. Using the lower time frame, focusing all your attention on the lower time frame, and you forget about the higher time frame. And the higher time frame is what's giving you the direction of the market. It's what's telling you what the market is doing at every point in time. The third mistake most beginner traders do is entering before confirmation. And I said that earlier, they enter before confirmation. Immediately they see a breakout, they jump in on a trade thinking a breakout means a continuation. And what they don't know is most institutional traders use that to collect liquidity before the market continue or keeps going to its direction. So now I'm going to give you a simple anti-trap strategies which you can use. Strategies you can use to avoid being used as a liquidity, which is a trap. So this is the strategies I'm going to give to you right now. The first step in these strategies, just avoid being the liquidity. Avoid being the liquidity. When I say liquidity, I mean money. Anything liquidity in the market is money. Avoid being the one they take for SL. Avoid being the one your SL will be used as a support or the resistance, because most of the times immediately the price taps in your stop loss, it keeps going to your direction. So avoid being that one. Avoid being that trader. And I'm going to show you here right now how you can do that. So this is the first step I'm telling you about how you can avoid being used as a liquidity. So you're a trader and you've seen a breakout structure to how I trade and you want to buy. So let's say you want to buy from this particular zone right now. You want the price to come, tap in, then you buy from this zone. You buy from here. Let's pick my buy to. You want to buy from here and you bring your SL below this last low here. Then you want to buy to a new high. So this is the first way you can avoid being used as a liquidity. Watch this now. The first thing you should ask yourself, the first question is, where is the liquidity in this particular market? Where is the liquidity? Where is the liquidity? That's the first thing. It's either you see the liquidity of others being grabbed before you enter the trade, or you rush into the trade, you being used as a liquidity. That's you being used as a fig tree which others is going to learn from, which is you being used as a liquidity before the market go to its main direction. Let me show you what I mean in this market. So you know this market is buying, it's buying and you want to join. We all can see clearly that this is a buy. You know your direction. Most of you, the direction is not your problem, it's your entry that is the problem. And watch this clearly now. Learn from this and it's going to change a lot of things for you if you watch and you follow what I'm saying. So you want to buy, and this is it. This is how you want to buy, and you have set everything. So ask yourself, where is the liquidity in this particular market, of which I see no liquidity right now. There's no liquidity. So you buying here now might be used as the liquidity before the price continue going to your direction. So let's see how this market goes. So there's no liquidity right now. There's no liquidity right now. It taps in your level now, and there's no liquidity. So the force that should be there before the market continue going to your direction is not there right now. So you might be used as the force. You, not only you, there are a lot of retail traders which are buying here right now. All of their money, that's what I'm calling liquidity. All of their money now is going to be grabbed to help the market push further to its direction. So you know your direction is not a problem. Study more on this, I'm telling you, and you see a change in your trading. So you enter the trade and you wait for it to go to your direction, and let's see what happens. Let's see how it goes. What happened? You can see it here. Now you've been used as the liquidity. What happened? Price keeps going. Price keeps going to your direction. And you'll be like, why is it taking me out right here before it start going to my direction? You see? You know your trend. You see? The market keep pushing higher, 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 higher. You know the particular thing you have to do, but this one thing makes you to fail this particular trade, makes you to lose this particular trade. So on the 5 minutes, you can see this is the 5 minute time frame, and what can we see? It's a sell, right? We are seeing a sell here on the 5 minutes, of which there are a lot of candles. So this is a sell automatically, and what we are waiting for, we are waiting for more sells. We are jumping in now, to come and take this low, and take this low out, and take this low out, and all of those lows. This is what we are waiting for. But let's mark this particular trend right now and see what is happening. Let's mark all of this trend, which is the higher trend. That's all we are looking to. So this is the third way you can avoid being the liquidity now, and I'm using the time frame for this. So let's see, this is the 5 minute time frame. Let's go back to the 4 hour time frame and see what happens. So this is the 4 hour time frame. You can see all those particular places you've seen. You can see it. This is the 4 hour. What can you see? The price now. You can see the price on a 4 hour. Let's play. It's just the one candle or the three candle which is giving you all those entire move. And you don't want to be the one who should be trading on the 5 minutes, using it for your directional bias and using it for all of that. You understand? So the price here is not going, the 5 minutes is not going to last long. And as you can see on the 4 hour, what can you see? We are buying already. So you using that 5 minutes now, you are just trapping there, and you keep selling and you keep losing, you keep selling and you keep losing. But actually the price is not following that. It's not following that lane to say. Do you understand what I'm saying? The 4 hour, the daily, and the 1 hour at least is fine for you for your directional bias. Your directional bias means where is the market going? Now this is the direction of the market. These are directional bias. So let's say these are directional bias now on the 4 hour time frame. We are doing what? We are buying. You know that, yes, clearly you are buying. Now what are you waiting for? You are waiting for buys. So since you are waiting for buys now, this is what you do. Now you go down to the lower time frame to check where to buy. So you go down to the lower time frame to check where to buy. Now you can start marking out your levels. Okay, this is a break of structure. Now you can start marking out your level. Okay, this is a break of structure. What you are waiting for now? You are waiting for a liquidity. Okay, this is another break of structure here. There's another break of structure here, which the price have respect to that zone, and you can see it moving. Okay, now there's another break of structure here. If there's a liquidity grab before is another zone here, you are going to buy from here. So you start using all these smaller time frame now to check for your break of structure, the liquidity. Okay, now you say, okay, since there is a break, is a liquidity, now you are waiting for a buy. So this is what the lower time frame helps you to do. It helps you to spot the liquidity zones and most of the breakouts which the 4 hour might not show. So once you go on the 4 hour now, you might not see most of this break of structure which is giving you it buys and buys to the continuation of the trend. You understand what I'm saying? But once you are on the 1 hour, you're on the 30 minutes, it gives you the break of structure. This is why most times you can see that particular place that we bought, you can see there is no, the break of structure there is not clear. It's not clear. But once you go on the 1 hour or you go on the 15-minute now, the 15-minute time frame, you see that the break of structure there, you can see it clearly before the price, reversed to tap in, before the price reversed to tap in, and what happened? It keeps going to your direction. So with this trade, I've given you these 3 tricks I've given you now. You can use them to, avoid being used as the liquidity. Always use that as liquidity in the market, and you also can start making some profits for yourself and avoid some of the unnecessary loss which you are taking. I believe this video is helpful to you, and once you put everything I've said here into practice, you're going to see a drastic change in your trading. So I'll see you in my next video, and thanks for joining this video.